Question 551. In regard to tax purposes, the assessor would consider a new well installed at a farm as an A. Maintenance, B. Addition, C. Improvement, D. Personal property. Correct answer is C. Improvement. Maintenance refers to actions taken to keep existing property in good working order. Installing a brand new well is not maintaining an existing one, it's creating something new. While a well is added to the property, the term improvement is the more common and legally precise term used by assessors to categorize such permanent enhancements for property tax purposes. An addition might more typically refer to adding a new structure to an existing building. Personal property is movable property that is not permanently attached to the land. A well, once installed, becomes a permanent fixture of the real property. Improvement. An improvement is a permanent addition to real property that increases its value or useful life. A new well is a significant, permanent addition to the land that enhances its functionality and value, particularly for agricultural use. It's considered a capital investment in the property. Question 552. Any solicitation materials serving as a real estate agent's initial point of contact with a customer must include the A. Regulations of the Real Estate Commissioner, B. Agent's license identification number, C. Agent's email address, D. Property listing. Correct answer is B. Agent's license identification number. While agents should be familiar with regulations of the Real Estate Commissioner, but including them in all solicitation materials might not be necessary for initial contact. Although including an agent's email address is advisable to foster contact with potential clients, it is not a requirement. Solicitation materials might promote the agent's services in general, not necessarily a specific property listing. Many states require real estate agents to include their license identification number on solicitation materials used for initial contact with potential clients. This helps ensure transparency and identifies the qualified professional. Question 553. Which of the following is correct in its description of an agency? A. An exclusive agency listing does not require a termination date. B. Open listings must include a termination date to be enforceable. C. Multiple listings are usually net listings. D. Multiple listings most often are exclusive listings. Correct answer is D. Multiple listings most often are exclusive listings. All listing agreements in California, including exclusive agency listings, must have a definite termination date according to the California Business and Professions Code. This prevents open-ended agreements and protects sellers. While it's good practice to have a termination date on all agreements to avoid disputes, the enforceability of an open listing in California might not strictly hinge on a specific termination date in all situations, especially if the procuring cause can be clearly established. However, having a definite term is still highly recommended for clarity and legal soundness. Multiple Listing Service, MLS, is a system where member brokers share listings with one another, increasing the property's exposure to potential buyers. To ensure cooperation and commission sharing among brokers, the listings on the MLS are almost always based on exclusive agreements, either exclusive agency or, more commonly, exclusive authorization and right to sell listings. This provides the listing broker with the assurance of a commission if the property sells during the term, incentivizing them to cooperate with other MLS members. A net listing is one where the seller agrees to a specific net amount they want to receive from the sale, and the broker can keep any amount above that as their commission. Net listings are generally discouraged and even illegal in some states due to the potential for conflicts of interest and unethical practices. Multiple listings on the MLS are almost always based on a percentage of the sales price, not a net amount to the seller. Question 554. Besides the interest rate, A charge affecting the cost of a loan is A. Discount points, B. PMI, C. Origination fees, D. All of the above. Correct answer is D. All of the above. Discount points are fees paid directly to the lender at closing in exchange for a reduced interest rate. 1 point equals 1% of the loan amount. Paying points lowers your monthly payments over the life of the loan but represents an upfront cost. PMI, private mortgage insurance, is typically required by lenders when a borrower makes a down payment of less than 20% on a conventional mortgage. PMI protects the lender if the borrower defaults and adds to the monthly cost of the loan. Origination fees are charges imposed by the lender to cover the costs of processing the loan application. They are usually expressed as a percentage of the loan amount and are paid at closing. All three of these charges increase the total amount a borrower pays over the life of the loan, beyond just the principal and interest calculated based on the stated interest rate. They represent additional costs associated with obtaining the financing. Question 555. The U.S. Treasury issues short-term securities maturing in 1 year or less which are called A. Treasury notes, B. Treasury bonds, C. Treasury bills, D. Treasury interest-bearing instruments. Correct answer is C. Treasury bills. Treasury notes are medium-term securities issued by the U.S. Treasury with maturities ranging from 2 to 10 years. Treasury bonds are long-term securities issued by the U.S. Treasury with maturities exceeding 10 years. Treasury interest-bearing instruments is a general term that could encompass Treasury bills, notes, and bonds. Treasury bills are short-term government securities with maturities of 1 year or less. They are sold at a discount and redeemed at maturity for their face value. The difference between the purchase price and the face value represents the investor's interest. They are a low-risk investment due to being backed by the U.S. government. Question 556. The seller's warranty in a listing agreement should include all of the following guarantees, except A. The seller's right to sell the property according to the agreement terms, B. The seller not being obligated to pay a commission, C. The property not coming with any undisclosed liens against it, D. The seller's description of the property being accurate. Correct answer is B. The seller not being obligated to pay a commission. The listing agreement is precisely the document that establishes the seller's obligation to pay a commission to the real estate agent upon the successful fulfillment of the agreement terms, e.g., finding a ready, willing, and able buyer. A seller's warranty would never state they are not obligated to pay the commission, as that's the core of the agent's compensation. The other options are standard and necessary seller warranties in a listing agreement. A. The seller's right to sell the property according to the agreement terms. This assures the agent that the seller has the legal authority to convey the property. C. The property not coming with any undisclosed liens against it. This protects the buyer, and indirectly the agent, from title issues that could impede the sale. D. The seller's description of the property being accurate. This helps the agent market the property truthfully and avoids potential misrepresentation claims. Question 557. The following is real property, except A. A deed to a house, B. An grove of trees, C. A gold mine, D. A swimming pool. Correct answer is A. A deed to a house. Real property refers to the land and anything permanently attached to it. This includes things like buildings, trees growing naturally on the land, and mineral rights beneath the surface. A deed to a house is a legal document that represents ownership of the real property, the house and the land it sits on. The deed itself is personal property, a piece of paper that signifies the right to the real property. Question 558. Which statement is correct regarding promissory notes? A. Discounting a note refers to it being sold for more than the face value, or the amount still owed on the principal. B. They are the evidence of the debt. C. They are used as security for trust deeds. D. They are always used when real estate is sold. Correct answer is B. They are the evidence of the debt. Discounting a note means selling it for less than its face value or the outstanding principal balance. The discount represents the compensation to the buyer for taking on the note before its maturity. Selling for more than face value would be considered selling at a premium. Promissory notes are the evidence of the debt that is secured by a trust deed, or a mortgage. The trust deed, or mortgage, is the security instrument that pledges the real property as collateral for the loan evidenced by the promissory note. The note itself is not the security. While promissory notes are very common when real estate is financed with a loan, they are not always used. If a buyer pays the full purchase price in cash, there is no debt and therefore no need for a promissory note. A promissory note is a written promise by a borrower to repay a specific sum of money to a lender. It is usually with interest, according to a defined schedule. It serves as the primary legal documentation of the loan obligation. Note if the word always appears in an answer option. One exception prevents it from being accurate. Question 559. In California, the homestead law provides protection against A. Mortgage payment liens. B. Judgment liens. C. Mechanics liens. D. Liens based on child support obligations. Correct answer is B. Judgment liens. A homestead refers to an owner-occupied property. In this state, the homestead law only protects against judgment liens. The protection can be attained by filing a homestead declaration with the county recorder or by claiming the exemption after a judgment lien-based foreclosure on the homestead property has been filed. The primary purpose of the homestead exemption in California is to protect a certain amount of equity in a homeowner's principal residence from being seized and sold to satisfy judgment liens obtained by general creditors, e.g., from lawsuits, credit card debt, etc. The homestead law offers this protection to ensure that individuals and families have a place to live, even if they have outstanding debts. The protected amount varies depending on the county and is tied to the median home sale price, with a minimum and maximum limit set by law. It's important to note what the homestead law does not protect against. A. Mortgage payment liens, deeds of trust. The homestead exemption does not protect against foreclosure by a mortgage lender if the homeowner defaults on their mortgage payments because the homeowner voluntarily used the property as security for the loan. C. Mechanics liens. These liens are placed on a property by contractors or suppliers who have provided labor or materials for improvements and have not been paid. Homestead laws generally do not protect against these specific types of liens. D. Liens based on child support obligations. Judgments for child support, and often spousal support, are typically exempt from homestead protection, meaning a home can be sold to satisfy these debts. Question 560. A real estate investment trust, right, must invest at least of its total assets in real estate property and cash. A. 0, 25, B. 0, 5, C. 0, 75, D. 0, 99. Correct answer is C. 0, 75. To qualify as a real estate investment trust, right, under U.S. law, a company must adhere to several requirements, including asset tests. One of these tests mandates that at least 75% of a REIT's total assets must be invested in real estate property, cash, and U.S. government securities. REITs must also be managed by a board of directors or trustees and distribute at least 90% of its taxable income to shareholders annually in the form of dividends.